Hello, everyone. I'm Butani from Private Lender Link here at California Mortgage Association's summer seminar in San Diego, and we're talking to lenders, service providers, trying to get some information for our members and for anyone in private lending. And right now I'm with Peter Steigleder from Fidelity Mortgage Lenders, based in Los Angeles.
Hi, Rocky. How you doing?
Thanks for joining us, Peter.
You're welcome.
So Peter's company, Fidelity, is one of the few lenders in California that does loans on cannabis use commercial real estate.
Yes. Yeah, so we've actually been doing cannabis loans for about 8 to 9 years now. So we were one of the first people to come into the cannabis space because we did feel that it's a new industry that's emerging. That's an industry that's going to be around for a while. And based on some of the relationships we have, we never felt that the federal government was going to come step in and seize the properties we would be lending on. So we figured, let's be a pioneer in that industry. Let's start lending on industrial cannabis space or warehousing space or dispensaries, retail locations. And so we've been doing that for quite a while now. We've been getting extremely busy as this industry is starting to bloom even more, and more people are coming into the space. And you definitely also see a difference. You know, we used to go to cannabis events and you have guys showing up in jeans and overalls. And now you show up to a cannabis event and guys come in suits. Yeah. So the suits have come into the space. It's gotten a lot more professional. Not that the previous guys were not professional, but they're truly running it as a business. And we just continue making loans in that space.
And so are there more institutional capital providers in that space? Or
there's a lot more institutional capital coming into the space. But I think the mistake that a lot of people have made, or they think the mistakes that people have made is that they've come into the space thinking, if I just throw money into that business, then I'm going to make money. You know, money grows on trees. But it is a business and you have to run it like a business, especially with legalizing the cannabis operations. Now that they have workman's comp, they have E&O insurance, the product has to be tested. The margins for a lot of the growers, my understanding is that it's somewhere between an 8 to 10% margin, profit margin. So it's not that big profit margin that everybody's thinking it is. And with all the rules and regulations and a lot of the unknown, a lot of the growers and people in the dispensary business have actually gone back into the black market because they're more profitable selling it on the black market than the legal market. And so California, I guess Colorado is probably the best example that we should emulate. So California still has a long way to go, but I think eventually we'll get there.
And so now cannabis has been legal in California, and but the real estate aspect has, you've been lending on it for a long time now. Does it seem like there's an oversupply of these cannabis grow facilities?
You know, I keep thinking that there's an oversupply because you have so many people coming into the space. So many people are buying up agricultural land, they're buying up greenhouses and there used to be traditional uses are now being used for cannabis, but somehow the demand is still there for it. So I think even though I keep thinking we have an oversupply, the demand seems to keep up with it. And COVID actually, I think, has driven up the demand. You know, people that used to maybe smoke a joint on the weekend, now they were stuck at home, couldn't go to work, start smoking a joint a day instead of just on the weekend. So COVID kind of drove up that demand.
Nice. And but in terms of lending on cannabis, obviously it's just the real estate. You have no lending within the business or the equipment. It's just solely focused on the industrial property.
It's just focused on the real estate. We don't do a deep dive into the business at all. And I know in some of these properties, people may make millions of dollars worth of improvements. But to us, the improvements could be a detriment. And the reason being is that if we ever take the real estate back, which is what we don't want to do, but if we take it back and I can't find another cannabis user, I need to go back to the traditional users in the industrial space, warehouse, distribution, manufacturing. So the improvements are actually an expense. So I need to tear out all those improvements so I can turn the space back into a warehouse that's usable for a traditional user.
Yeah. So I'm assuming you get a lot of these, borrowers, the real estate investor, that they just think the value is so much higher because it includes all this great equipment and it's just you just value it as an industrial building. That's
well, for us. I mean, there is value there, but it's for a very specific user, right? So it's just for a cannabis user. So if you can find another cannabis user, yeah, they will pay for those improvements. We just don't want to take the risk. You know, I don't want to be drawn on such a narrow buyer base. I want to be able to have a broad buyer base if I take the property back.
To liquidate it as soon as possible. Yes, that makes sense.
Yeah.
And so, is there anything new that's happening in California in terms of lending on cannabis use properties? Has there been any regulatory issues that have been a challenge?
There hasn't been any regulatory issues. I think one of the things about 5 to 6 years ago, when when people realized that these properties are in what's called the green zone, or they call it the blue zone, it's the industrial zones, but the green zones, cannabis users were paying 50, 75% more for those industrial buildings than a regular user was paying for. But I think in today's market, that gap has shrunk down. Industrial users, in my opinion, or cannabis users, are not overpaying anymore for warehousing space to the extent they did 4 or 5 years ago. So the market has become a more level playing field for cannabis users compared to traditional users. Just the same way where we used to lend, we used to make a loan and get 10% plus interest rates. Now our rates that we give to a traditional user is the same as a cannabis user. So that playing field has shifted a little bit. So for the cannabis user, it's been nicer in terms of being able to actually pay a more fair market value for a property than overpaying for a property. What I do see, though, is when, in my opinion, real estate investors make a mistake when they buy a property that's occupied by a cannabis user, and the market, it's an above market rate. So now they're thinking, hey, just to give you an example, we're doing a loan right now on a property that's being purchased for $7 million. The traditional value on that property is $4 million. We're making a $2 million loan. So this investor is paying $5 million based on the high rental rate that tenant is paying and on the improvements that tenant has made to the property. But if that tenant goes out of business and you can't get another cannabis user in there, that property is worth $4 million, not $7 million.
Yeah, interesting. Well, thanks for sharing all that information.
Thank you.
And if anyone has a loan request for a cannabis property in not only California, by the way, you do other Western states,
Any
correct?
Western states where cannabis is legal, and we're doing a deal right now in Boulder, Colorado.
Excellent. So if anyone has a cannabis property loan request in any of the Western states, reach out to Peter with Fidelity Mortgage Lenders, and he'll be happy to help you.
Thank you.
All right. Thanks for joining us.
Thanks.